Hey everybody, hope all is well as we move very quickly into summer here. Amazingly, already beginning of June, summer right around the corner. Uh, Looking back, amazing to see where we are after the year we've been through in the markets. Very volatile. I go back just 2 months. The markets were in free fall at the beginning of April. We've had a rally over the last 6 weeks or so, getting us back to where we were on most global markets. We're back positive for the year right now. Amazing to think about as we've kind of gone through the year with positivity to start, negativity, and now back to positivity. That volatility likely will continue, but let's recap here where we were in May. So that was the best month of May in the U.S. market, the S&P 500. In the last 35 years, you can see they're up 6.2%. Amazing month of May. Remember a few videos ago talking about sell in May and go away as the old investor adage. If you'd heeded that information, you of course would have missed out on a big return. So let's see, what does that mean going forward now? Look at these months of May that have also been very positive. Of course, this is a short list, so keep that in mind. But look out 12 months. We always want to look at the longer term. Always impossible to predict and time things in any sort of short term. But 12 months here, you can see all of these cases. The markets were up and very positive on a 12-month return, almost 20% of the average there, 19.9. So if history repeats itself, then we should have a very good next 12 months ahead. But that's, of course, not all that we look at. I did want to point out with this positivity that we're having, there's still going to be some volatility. And that's just the normal way that the markets work. So you can see here, in years that the S&P 500 was up 20% or more, what was the worst day in that year? And you can see the average worst day of 3.5% negative day. Some of these up in over 6% on a negative day, close to 7% in 1997, 1998, but still returning positive for the full year, over 20%. So we saw that at the beginning of April as well, very negative week or two in that period. But the markets can still return positive. You just have to be able to sit through that negativity, and of course make sure you have a well-structured portfolio, well-diversified, ready of high quality investments that will bounce back and provide those outsized returns like we're seeing there. But where if the markets are going to return positive, what are some signs of that? And this is one chart we looked at. So this is disposable income in dark blue, the compensation growth in green, and then inflation in the yellow there. And you can see, and these are all trailing 3 month, 6 month, 1 year growth rates. So if you look at the 3 months compared to the 1 year, you can see that disposable income and compensation growth is actually picking up, whereas inflation hopefully will be getting back to that 2% number that they're targeting. So having obviously more disposable income and more compensation growth in the economy bodes well for increasing that economic growth, which should, of course, relate to higher sales and earnings in companies, which, of course, the stock market's all about. So that this is a good sign. Of course, there's still lots to get through. We were on growth trajectory before the tariffs really came into play. Still a lot there. Things can change, as we've seen over the last 6 months. Things can change very quickly and then change back very quickly. So there should be lots of volatility still ahead as we, especially south of the border. But this is a good sign that there's an increase overall in disposable income and compensation growth, especially relative to that inflation number. So that's something to consider. Of course, we'll be back in a couple weeks. I'm sure things will have changed by then as well. In the meantime, happy to book a meeting. Give me a call, send me an email, or book yourself in using the calendar. Until next time, take care, everybody.